Good day, ladies and gentlemen, to the mining news on Commodity TV. Gold continues to march inexorably and stands at $3,400, $3,500 per ounce. We expected this and have communicated it repeatedly over the last few years. A healthy correction would not be a mistake, but it will probably be a long time coming. But we will see. We see already a little bit of not a sell-off, but a sell-down because that was a little bit too fast, and it looks a little bit like a parabolic chart now. I wouldn't be astonished if gold goes down to 3,050, maybe 2,850, 2,900, but that really buy in because it will go much, much higher. US GoldMining announced that it will begin an initial economic assessment for the Whistler Gold Copper project located 105 miles northwest of Anchorage in Alaska. The study PEA is intended to provide an initial assessment under US regulation SK 1300 and a preliminary economic assessment under Canadian National Instrument NI 43-101. The PEA will consider the project's existing mineral resource estimate, which includes 294 million metric tons at 0.68 grams gold equivalent per ton for almost 6.5 million ounces gold equivalent in the indicated resource category and 198 million tons at 0.65 grams gold equivalent per ton for an additional 4.16 million ounces gold equivalent in the inferred resource category. The timing of the planned PEA is aligned with strong metal prices, as gold has hit a number of record prices over the past year and the current spot gold price is over $3,400 per ounce, while the mineral resource estimated gold price is $1,850 per ounce, very conservative, leaving plenty of room for upside. The decision to proceed with the PEA follows successful drill programs completed in 2023 and 2024, which included the best ever drilled intercept of 652 meters at 1 gram gold equivalent per ton and the discovery and extension of additional high-grade mineralization within the Whistler deposit. The company has completed an internal gap analysis to ensure a comprehensive dataset is available for the PEA. In addition, there is a strong political tailwind for the project with state and federal support for responsible resource extraction in Alaska. Whistler is the closest major undeveloped gold-copper mineral deposit to Anchorage, Alaska's largest city, and is therefore well connected to existing highways, port facilities, power grids, and a skilled labor, supply chain, and service sector. US GoldMining should definitely be on your radar and watch list. Skeena Gold and Silver announced positive progress in the permitting process for its 100% owned Eskay Creek Gold-Silver project. The EA, the Environmental Assessment Application, has been submitted to the BC Environmental Assessment Office for joint review with the Tarleton Central Government. The upload of the revised EA application commenced on 31st March and was completed on 14th April 2025. The company has outlined and responded to all agreed information requirements of the original application to support a robust revised application to restart mining operations at Eskay Creek. The mine will be an economic driver for both the national and local economies in the long term and will provide significant value with an estimated $14 billion GDP impact over the life of the mine, assuming gold and silver prices of $2,500 and $30 per ounce respectively. Since 2018, Skeena has already invested more than $460 million in BC, a significant portion of which has gone to service companies in the northwest region of the province. The project will create meaningful employment opportunities for many years to come. Skeena has always placed a strong emphasis on hiring local employees and suppliers wherever possible and will create over 800 direct jobs and potentially 2,000 jobs for outside service and contracting companies. This will also have a positive impact on the tax revenue side. The project is expected to generate approximately $3.6 billion in direct, indirect, and induced tax revenues for BC and Canada over the life of mine. This estimate includes provincial and federal tax revenues, including BC's corporate income tax and mineral tax, and assumes, as we said, $2,500 in gold and $30 in silver. Almost equally important to gold and silver, Eskay Creek also hosts a number of other important minerals, including significant quantities of antimony, zinc, lead, and copper, none of which are included in the economic assessment of Skeena's current definitive feasibility study. Once Eskay Creek commences production, Skeena will be able to recover all of these important metals in a total sulfide concentrate. These other metals also have the potential to increase the value of the concentrates and the economics of the project beyond current estimates. Skeena is a clear buy and will be an important mine for Canada in the near future. Our pointed figure chart has provided another buy signal, and we have calculated a new price target of $29.50 to $30 Canadian for the stock. Just like gold and silver, we are convinced of uranium, which in our opinion should rise again from summer fall. Uranium energy is one of our topics. Amir Adnani, the founder, president and CEO of UEC, has just been appointed to the board of the World Nuclear Association. Based in London, the WNA promotes the growth of the nuclear sector by connecting key industry players representing the industry's position on the world stage and providing leading and authoritative information on nuclear energy. Its members are responsible for 70% of the world's nuclear power generation. Members appoint an executive director and elect a 20-member board of directors to set policy, strategic goals and provide leadership for the WNA. Amir Adnani, president and CEO of UEC, said, "It's an honor to join the WNA board at such a pivotal time for our industry. The growing number of countries and major organizations joining the commitment to triple global nuclear capacity by 2050 is a seminal moment, the most consequential opportunity in decades to shape the future of clean energy. I look forward to working with my fellow board members to guide this transformation and ensure that nuclear plays its essential role in providing affordable, reliable and carbon-free energy around the world," said Amir Adnani. We believe that the US in particular needs to go all in on domestic uranium production as the reactor fleet grows. Small modular reactors will come to the market in 2028 and will need just as much additional fuel. As the USA has had to import 99% of its fuel to date, it must free itself from this dependency. This can only be achieved through consistent domestic production. It has done this with oil and gas and has become a net exporter. Now this will be repeated in uranium, and UEC will allow them to benefit massively. The formation from July 2022 to January 2024 in the pointed figure chart with breakout and a buy signal results in a price target of $17.50 to $18. If uranium prices rise sharply to $150 per pound or higher, we can also imagine prices of $25 to $30 for the stock by latest 2030. Especially if production continues to increase to 4 to 6 million pounds of uranium per year. You can also find all the information on our commodity TV app in German and English, as well as everything about commodities. Please note the disclaimer. The shares discussed are part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye and servus from Austria.